I want to talk about a couple things that are influencing my bias, and just overall, this is going to be a very, very good video for any ICT trader trying to understand the market and piecing together all of his learnings. Because, when you're watching ICT, his videos are very long. He doesn't piece them well together. He's a good teacher and he has great content. Everything works, his concepts work, but it's very hard to make sense of it. All right. First, we're going to be going over the trade I took yesterday and the trade I wanted to take today. This trade today was just 4 hours of pure consolidation. So, it was hard to make this move. If there was this high that was taken out here, I had marked on the 1 hour. If this high was swept, which was never swept, I would have probably taken it, even though there was this fair value gap. I would have anticipated it being inversioned, but it never was swept, so I didn't take it. But I was aiming for these lows down here to be swept because 3 hours of relatively equal lows never being swept. But I mean, we couldn't get that move, and happened towards the end of the day. We couldn't really find any moves within these 4 hours of consolidation. Anyway, so I just want to say my bias for tomorrow. We did sweep out this minor, this minor sell side liquidity. Anyway, predicting my bias, I want to see this get swept out because, it never swept out this high. And I just want to give a quick lesson on how I overall view the market, right? So we can see this as, man, there's so much to speak about. I just want to give a quick zoom out and just bring us over here to explain something really quick. I want to talk about the power of three, right? And what it is it's accumulation, manipulation, and distribution. Now, when the market is accumulating, it's doing pretty much moves like this, consolidating, right? Until you get a manipulation move either up, right? So this would be the manipulation here, or if you get a manipulation move down, I could do, right? For example, we get this leg down, right? So it's accumulating, and you could see that here. See this accumulation range here. And then once it comes down like this and sweeps out this minor, oh, let me make this red, this minor sell side, then you can anticipate a distribution move, which you could see in the market literally every day, right? It's very, very respected concept, honestly, from what I've seen. And so I view the market in that way as well. It's just helps so much. So you see that a lot recently because now after this big layup we had recently out of this larger accumulation range here, these past couple days we've been having to work with that. So let me just show you some real time action of that. So here you have this accumulation range, right? And just like I said, how it could happen to the downside, it could happen to the upside. Here would be the sweeping and the manipulation. So it accumulated, manipulated to the upside, distributed to the downside, right? Now, as you can see, this is, you see it almost every day. In higher, this happens in every single time frame, from the 1 minute to the 5 minutes to the 4 hour. And you can even do it to find your bias. Like today, you kind of had this accumulation range, a manipulation, and then a slight distribution. This is like a lower time frame play. But you could see it here, right? So you get this move, the accumulation, manipulation, distribution. Sweeps out all of this sell side liquidity here. And once it sweeps it out, it comes up, sweeps out, bounces onto this range, goes lower, sweeps out this range, comes up. And I was anticipating it to respect this fair value gap, but it actually closed above it for today. But I still had a feeling it would come down because it left equal lows. And I'll show you where it left those equal lows, right over here. And this is all on a 1 hour time frame, honestly. So since it never swept out this high here, I'm anticipating it to go higher. So this high was never swept, so these means these are relatively equal. And we all know what happens with relatively equal highs. They really act as a good form for buy side. Unfortunately, it looks like it's going to get swept in this pre-market move, so that's unfortunate. Next draw could be this high here. I could see being taken out. Now we're on the daily. We can clearly see the trend is up, right? So we're really not showing any signs of retracement yet. Until it at least like makes a noticeable break of structure to the downside, we're bull. Now we can move to the 4 hour. And it seems like, let me just say, so we know how the market's doing multiple things. It's either running for liquidity, right? Highs and lows. So it's running for liquidity here. Or as we know, it's rebalancing inefficiencies. And what can be an inefficiency? Fair value gaps like this one here, right? As you can see, it rebalances this by coming down, coming back into it, tapping into it, moving lower. This would have been a beautiful entry, but look at the time, 4 o'clock. So we know it's running liquidity. We know it's rebalancing inefficiencies, but nobody really talks about that third one. And the third action it does is generate liquidity. Now you could really see it generating liquidity when you sweep all-time highs. I mean, we swept like the all-time high a couple weeks ago now. As you can see, the sweep happens. Now, what has the market been doing within these weeks? Uh, it looks like it's just been running up, right? Obviously, right after it sweeps it, it has to come back for more liquidity to rebalance this inefficiency as well. So it comes back, rebalance this inefficiency, moves up, right? But on the daily, you could see it's generating more liquidity. So it swept this out here, and you see how there's a big move down, sweeps out this low into this fair value gap. Whenever you see a low, a higher time frame low into a higher time frame fair value gap, just know that that's a very high confluence move, that it's going to be moving up. Or if it's on the opposite, there's a low into, or if there's a high into a fair value gap, a sell side fair value gap, then very high confluence for it to be moving lower. But just know these are very high confluence fair value gaps when there's a low tapping into a fair value gap because it's sweeping and it's going into an imbalance. So as you can see, it just taps into it, sweeps it, moves higher, moves to the next buy side liquidity. And you could really see this on the 4 hour. Besides, I believe this is news, but you could really see on the 4 hour here how it comes back up to the buy side. And after it sweeps these all-time highs, you see the market. What is it doing? Generating. Now, you could say this in the accumulation range also, which it is. Clearly, it is an accumulation range. So it comes, sweeps out these lows, taps into that higher fair value gap. And you could say this order block here because it's the down move before the up move. And you see the inversion here. You could enter in right here. Or if you want to use a different strategy, you could wait for the break of structure, right? Take the fair value gap within the equilibrium of that range. So it would be this fair value gap, right? Because it's the fair value gap that's within the equilibrium here. So that's the one that you would want to see get tapped in. The reason this one, it's too close, way too close. When there's 3 fair value gaps, and if you want to be bullish, you don't want to see this one get hit because it comes too low. And if this one's respected, you'll get kind of a bad fill. So you want to see the one in the middle, the equilibrium one. And when you'd expect it to come up, sweep out the buy side. But when it doesn't do that, that makes it even higher confluence that it's going to go up eventually. Because as I said, if it just came down, ran these lows, and then went back up and swept it out, that wouldn't have been enough generation of liquidity because we did just sweep out the all-time highs of the S&P. So right now it's just generating because now there's even more for the retail traders. They're looking at this as support. Clearly, right? So you got this, never swept out this. These highs were never swept out. They're all relatively equal. These never got swept out. So there's a lot of buy side liquidity above here. People think that this is a safe range. They say, oh, it's respecting it. So this is a very safe range. Let's put our buys up here. Let's put our buy stops up here. So when people are going short, they have their buy stops. For example, let me just show you. If they think, okay, let me go short now, it looks like it's respecting these highs. I'm going to put my stop above these highs. And I'm going to short all the way down to here. What happens? It comes down into a fair value gap and instantly reverses on them and runs for their buy side liquidity. So, completely ran through it. Now it extended. And now the market's looking for more generation of liquidity. What does it do? It comes down, sweeps out the sell side, right? Sweeps out these sell side equal lows, equal 4-hour lows. And we all knew this was going to get swept. Why? Because this is something ICT calls low resistance liquidity. When you see this, never sweeping 1, 2, 3, 4, 5, 6, 7, 8, 8 lows like this, never getting swept, just expect a big candle to come and get them. Big candle comes and get them. It's like once you learn it, you're like, wow, none of these swept each other. Now, maybe if one swept and then went up, then, it already swept. It already stopped them out. But this was all a generation. They're looking at this like, oh, we're bull. We're bull. It's respecting. This is support. This is support. Let's go along. They go long. What do? They get stopped out, right? The market stops them out. Boom. Find a huge higher time frame entry. What is this? Sell side liquidity sweep. Inversion fair value gap. You could enter in up here. Boom. Stop underneath these lows. Now you're probably thinking, oh, why are you putting them under the low? As you see, they get ripped through. Because once it sweeps the liquidity, if it's a valid liquidity sweep, it's not going to come back for those lows. So after it sweeps those, right? For example, boom, right? Sweeps out these highs. This candle sweeps out those two relatively equal highs. So when you're going to short, you're going to put your stop above the high and then short down to the lows. And then once it sweeps out these lows, even though you wouldn't take this move, because why? Why wouldn't you take this move? I mean, look at the chart. Why would you ever take a short in this chart condition? Right? You're looking for longs. Your bias is long, right? Especially, I mean, this is a clear short though because the low resistance liquidity and the sweep on buy stops. Anyway, this would have been a clear entry. You could have, honestly, this is a 4-hour chart. You could have found a better entry in here, but you could have let this ran way higher, right? Came down for more liquidity, ran all the way back up. Now what is it doing? It sweeps out the buy side, right? The market does this every single day on every single time frame, all day. Boom. You have these highs. Clearly, it sweeps it out. Now pushes a little bit higher, comes into this fair value gap, rebalances the inefficiency because I said two things it does. It runs for liquidity, which is above old highs and old lows. And the second thing it does is rebalances inefficiency. Fair value gaps is one of the most obvious inefficiencies. So after it comes, rebalances it, moves higher, your bias is still bullish, but now you have about 2-3 days of straight up consolidation. And we all know why the market's doing this, because it's reaccumulating orders. So the second you see this, honestly, the 4-hour doesn't do it justice. Let's see if on the 1 hour, perfect move right here. And I actually think I remember taking this setup because what do we have? So first off, we see 2 days worth of accumulation, manipulation, distribution setup. We see 2 days worth of that, right? We get the accumulation. We clearly got the manipulation. And what is it going to do? Distribute, right? So, I mean, this is the clearest setup you could have on the power of three, right? Here's another setup. You have the accumulation, clearly have the manipulation. I mean, you can't miss this one. And as though this one isn't as obvious, right? It's still literally, it's still 4 hours of pure distribution. Now, this happens on every time frame. So, I mean, you could have taken a long setup from here off this inversion because, I mean, look how clean this inversion is. Does it ever close underneath this inversion fair value gap? It never closes underneath this inversion fair value gap. So it's playing inside of it. The wicks, the wicks don't matter. Look at the bodies when it comes to fair value gaps. If you see a fair value gap get closed with the bodies, then it matters. But look, this has been being respected. And what makes it even better, what does it have inside of it? A regular fair value gap. Both of them being respected. So it's a clear, obviously bullish. If you're not bullish, you're looking at it wrong. But now that it's sweeping out all-time highs, what is it doing? It's generating more liquidity. So all of this is just generation of liquidity for future days, right? This is what it's doing. All of these highs up until here gets this one swept out, but now there's still these two highs. And what does it do? It's going to come back. Clearly, right? We have those lows, and within here, there's definitely a 15-minute imbalance. It sweeps out those lows, runs all the way up to here, sweeping out those buy sides, come back down, probably rebalancing an inefficiency, runs it back up. You could probably find an entry on on a 15-minute chart. Way more clear. All you got to do is mark out old highs and old lows. Just do that. Even though there's, wow, this is just pure consolidation. But mark out old damn, I can't speak. Old highs and old lows. Just mark those out. Watch them get ran. Now, you could probably say, what about these lows? We're in a bull market. We've been generating liquidity. We've been waiting. Eventually, these will get swept. I mean, 100% eventually. I don't know if so it has already. I didn't even know that. But yeah, as you can see, I mean, I'm not even fully aware of everything, but this is just clear, man. So you have all of this 1, 2, 3, 4, 5, 6, 7, 7 candles of just pure sell side liquidity. And we knew the market would come back for that eventually, right? We didn't know when, but they're all targets. And as you could see, here's another setup. I mean, just looking at it, once you do it enough, you're going to find these setups. And this is high confluence setups. You got the accumulation, the manipulation, and what does it do? It completely distributes down. Distributes down to all of that generation of sell side liquidity, down to these all equal lows. It even sweeps out this one right here. Now you're probably asking, why didn't it need to sweep out this one? Because you know how much sell stops it just took? I mean, you know how many people's money it just robbed? And you don't want to enter in at this candle. I mean, even though, as we said, look at it, there's a doji. What does it do? It reverses, right? You want to look for like a singular fair value gap, even though this is a very strong setup, right? I've never seen this setup fail, on me at least. I've never seen it fail. You got the sell side liquidity sweep, a single candle fair value gap, a single candle close, and it completely runs. It completely runs. Wow. Just pure. It's all happening right in front of us. We can make moves on it. We can do good. This is a pure intellectual strategy. Anyway, thank you for watching. Good luck trading and be very safe in this market because, I mean, right now the market condition's been very bad, but be safe. We just all I want to say is look at this for future reference. All right, if anybody is watching this far into the video, 20 minutes in, I don't know how well your attention span is. Where higher time frames are bullish, we have all of this generational buy side liquidity. So, use that as you can, use that as you will, and good luck trading.